Yo, what's up, guys? So we're just going to be going over this GBPCAD setup that I shared quite a while ago, the 10th of September. Oh, it's not that long ago. And we also talked about it quite in depth in the live on Monday, using it as another example to explain advanced liquidity concepts. So I thought I would just do a recording also now, since the targets have been met. So step number one is to identify the areas of support and resistance, so you can see where is the liquidity resting. So we look for support and resistance, and then we try to identify the swing highs and lows above and below the support and resistance zones. So the swing high above this resistance zone is this one right here. So the logic is that people are entering short, putting their stop loss above the swing high above the resistance and looking for lower prices. To add confluence to that, we use market structure, where we say, okay, there was a bearish market structure shift. So there was a bearish market structure shift and price returned back into resistance, which is probably just a bit above the OTE level, but guess it's respecting it slightly. So bearish market structure shift, return to OTE, resistance, manipulation, take out the stop losses. Okay, so let's just go into it a bit more in depth. So I'm down to the 4 hour now. Let me just refine this area quickly. So same logic still, and also what my eyes immediately jump to is this area right here. Okay, so the swing high above here is around here. So this is basically our map at the moment where the liquidity is resting. Now, after we have identified where the liquidity is, we just need to identify the market profile we are trading in. Are we trading in this type of price action, or are we trading in this type of price action? Because if we are trading in this type of price action and we come close to resistance, then sometimes I would, maybe it's like this, sometimes I would enter a little soup here for the last leg of expansion towards buy side, and not necessarily wait for it to, let's say that didn't touch, not necessarily wait for it to return to 50% of the range and then take it. I will look for aggressive entry sometimes, a turtle soup, maybe there's S&T to take out the liquidity. But when it's price action like this, then I would rather say, okay, let me, let's say maybe it's like this and we're hitting the resistance. Then I'm not going to say, okay, I'm just going to maybe enter a low like that. I would then rather say, okay, let me, my drawing is a bit off, so just excuse that. But basically what I'm saying is I would rather wait for price to at least turn to 50%, maybe even take out a low here, then look to enter if I can maybe see S&T, and maybe a lower time frame advanced liquidity set up here, and maybe, okay, so the higher time frame target is here. So it hits the resistance and it's starting to come down, so I think, okay, manipulation, but I'm not in a hurry to enter because price action is choppy. I wait for it to return to a discount, maybe take out the low, maybe do S&T, form another low time frame support and resistance area, and then that would be my fuel to get the last leg of expansion. So in this last leg, I would anticipate expansion if they created a low time frame buy side target in line with our high time frame buy side target after price returned into a discount. So I hope that is clear. I didn't really plan to draw it like that, but it just happened. So I hope that was clear to you guys. So let's look at, on the 4 hour, what price environment are we in? Okay, we are in this type of price environment. So I am not necessarily looking for this type of move where, okay, if you only focus on this fractal, nah, not really. So it's choppy, okay? So let's say price action was coming aggressively from down here. Then maybe I would have said, okay, I'm looking, we're hitting resistance now, big expansion, ignore this, this is price, big expansion. So then maybe after we've taken out this low, I would look for a turtle soup entry. Let me actually use this thing. Try and use it. So take out this low and then do the aggressive move towards the buy side, not necessarily waiting it for it to return to discount. Because why? Because we are in expansion price, but we are not at the moment. So we are in choppy price action. So once it returns to the resistance, I'm not necessarily looking for a quick dip and then a buy. I said I will be waiting till 50%. So I like to use this fib. I mark out the highs and the lows. Sorry about that, guys. I just had to pause quickly. I just got very distracted by something. So I mark out this range and it did return to 50%. Okay, now it's looking, this is also annoying. Now it's looking a bit different, okay? We rejected from the resistance. So I'm thinking, okay, this move is manipulation. Okay, we did return to the 50%. But if we look at, so we did return to 50%, so I can be looking for longs. And if we look on the lower time frame, we created this area where, okay, there was a bearish market structure shift. Price returned back into this resistance, creating this resistance. Price dropped, hit this area again, that is a clear area of support and resistance, and a big aggressive manipulation down. So it adds fuel to this bearish illusion that they are painting, where this was resistance, there was bearish market structure shift, it broke through this lower time frame support and resistance, came up, big drop down, but this drop down was just down into 50% of the range. So that could be where you were looking to get involved, or you can wait for it to return back into this area, because maybe it was just going to continue down. So if you are happy to take aggressive entries, you can, I would mark it out like this, and I would say, okay, if there's enough confluence, I would enter here. And if I'm wrong, I might just get stopped out and price might want to go here for the reversal. So then I'll maybe enter again with lower risk, and if I'm wrong again, then I'm just wrong on this move. You can't always be right, but the draw on liquidity is clear. So I'm just looking to wait for price to return to a discount because we are in choppy market, and then look for entry model either here in the mid or here in the 75% area. So remember when I did that drawing, I said when there's a lower time frame buy side in line with the higher time frame buy side, and we already created this manipulation and we already returned to 50%, then most likely this last leg is going to be an aggressive expansion towards buy side. So in this last leg is the time where you can say, okay, I am happy to enter maybe a turtle soup. So let's say, for example, on this day I did trade here. I can share the execution. I will share it in the Discord. But I'm more focused on the logic than the execution, just explaining the price action. So here is price nearly going to it, and then just doing a turtle soup and then going to the target. So this is what I meant by when the expansion is on the way, you can look for a bit more aggressive entry. You don't need to wait for price to return back to 50%, because it already did its manipulation here, hitting this resistance, dropping aggressively only to mid-range. So that you could have argued was manipulation, and as price comes up here, they can offload their positions at these liquidity pools. So that's what we call engineered liquidity. Now to add the confluence, we look at let me just put them side by side. At this time here, we say GU and GBPCAD as around the 80% correlation that I've seen. So on GU, we also have a clear draw on liquidity. area of support and resistance, swing high above it. So it's clear that GU is bullish, so GBPCAD should also be bullish. Now let's look at what happened at this manipulation. At the time of this manipulation, when price hit the 50, GU also came down and hit the 50. And at the same time when it hit the 50, it created SMT with euro. So we'll look at euro now. So just remember this. Sorry, just had to pause again. So we create SMT. You can see on GU. I mean on EU. Sorry, I'm confused now. Keep getting distracted. There's the SMT, and it was simply EU returning to the 75%. So EU drops to 50, GBPCAD drops to 50, EU drops to the 75 where it creates SMT, and all of them have a bullish bias where we are looking for the swing high above the resistance to get taken out. And all of them was in choppy price action, so you had to wait for range discount. Even if you identify this area of accumulation, you can just wait for price to return to these low areas and then try and get a buy towards your higher time frame withdrawn liquidity. So there was the buy side. Buy side target cleared, SMT towards the target at 75% discount area, while EU was at the 50% discount area, giving confluence for GBPCAD to continue its bullish move, because we say that if GBP is going to be bullish, GBPCAD is also most likely going to be bullish. So that is how I would have framed this trade idea using advanced liquidity concepts to identify what is the higher time frame drawn liquidity. I hope it was clear. I got distracted a bit, but I think I got my message across.